Hi there everybody, it's Matt from Investor Trade. Just doing a Sunday night recap, ready for the week ahead on Dow Jones, Wall Street. So what we're looking at now, we're on an hourly 4 chart. For those regularly watching, you'll see a slightly different indicator at the bottom, or colouring anyway. I just need to update that with our usual colours, but I can assure you it's the same indicator. I've also changed some of the wording on our template, just so we can keep an eye on the tools, and they're always in front of us so we know exactly what we're looking at. I've also just added, just as a reminder to myself, in the RSI box down here, to obviously keep a lookout for any divergence. So if we've got lower highs, lower lows, and prices going up, then obviously we'll be looking to sell, and vice versa with the buy. But I'll just jump straight into this view. Just going to move this, come right back so I can show you which lines these refer to. So these trend lines, first one starts at this big drop we had December 2018. That line obviously comes up, cuts right through the price. Let me put it on daily, be easier. You can see where that goes, cutting off to this main sell-off that we had after V-shaped recovery in June. So I've kept that line in there, I've extended it out because that's obviously, it was support, it was in a major resistance, so let's keep an eye on that. Obviously these points all the way up were support, kept bouncing lovely off there. Remarkable again, maybe, that it happened to be the same level that bounced off. So I've included that in here, okay? So as we move through the chart, you'll see that. A couple of observations just on RSI. No, we like to trade in extremes. It's not in an extreme area at the moment, so it's a bit of a tricky. On the daily here, again, the RSI and OSMA are fairly well connected. So I'm just going to zoom in on the hourly 4. Again, you'll just see these trend lines here, a bit more detail. If I come out on here, again, just going to put some horizontals so you can see. These are the black horizontals there. That was the all-time high, so we're not far off. I want you to be aware that NASDAQ and S&P have both made all-time highs since the drop-off, and obviously Dow Jones is lagging. Just put this line in here because this was obviously major resistance. Came down, bounced, came and bounced. That's a key level, and you can see we're in that level. Price broke above here, came down, pulled back, price came up to here, small pullback, but then rallied. Since then we've seen some consolidation actually, and the question is, and I've labeled it up here, whether this was the wave 3 of this move here. So 1 2 1 2 3 4 5, so 3 of this potentially final move up before a decent pullback, and whether the pullback's actually happened, or whether this is actually doing what we call an Elliott wave, a double correction. So some key observations. Obviously price has come down, and it's currently on the hourly 4 below all the main moving averages. So on here I've got 9, 21, 34, 50, 100, and the black is the 200. So it's not a great sign at this point. Okay, now this was the low in futures, 27,813, a few days ago last week, and price has come up, and so far it's been holding. I see this level as crucially important. If I mark this up, this was the level that it was kind of dealing with all last week. If I put that probably a bit slightly lower, these were the levels. Okay, so this was where price came up and we had a decent sell-off. So this level is really important. You can make a head and shoulders pattern there, and one of the ways of getting a target is using obviously left shoulder. Price should cut through, then the left line. So we may well see price come back down here. One of the signs I'm going to be looking for when I do enter will be the divergence. At the moment we don't have price divergence between the two, so I would really like to see another drop down here on Wall Street. Some of the levels where I feel are, pay particular interest to, and I'm going to mark these now. Should we get another move down, this kind of level here, I really would want to see what happens. So 27,142, not a million miles away again. It would tie in with a quick drop down there. And again, it's all about this level. This level is absolutely key. it's really going to show us, I think, where we're going to look down to. I think most of these other areas of the breakout kind of been dealt with. There was a mini triangle, obviously, within here. Whether it comes down that far, I'm not sure. I'd really be looking for the price to sort of come down to this region. And then what I would like to see is market then go up to new all-time high. If this is a 1, 2, 3, there's potential that's an ABC for wave 4. We then got a 1, 2, 3 up. So then we could get a 1, 2, 3, 4, 5 down to finish to see if it is a double correction. As I zoom in, I'm just looking whether there's a case whether this is actually a completely new move up. If I put this to the hourly one, and again, this is why this level, just move that out of the way, we will put this directly on it. 27, I think it's slightly, yeah, let's be a bit more accurate there. 27, 195, I say it should be. There's an argument that we've got a 1, 2, a 3, and a 4, and a 5 there. So if wave 4 has ended, then this would be the case. We want a 1 there. We would then be, yep, it's kind of just made that there. We'd have an A, a B, and a C. Probably be looking at wave 2 here. Okay. Now, if this is a big 3 going up, okay, then there's potential a 1, a 2, a 3, and a 4, and a 5 to here. Okay, so that this has come back to that would be that'd be 3 and then a 4. Okay, so sub 4 within there. As I look at that, this has come back too far for that to be the case. So there's a chance that this would be a 1, 2, and that's 1 of the 3, 2 of the 3. So again, this would need to hold. If I start looking at some of the Fibonacci that has come back down to, if I put it this way around for you, you'll see it's a lot. What's the low there? 193. Let's put it there. Okay, you'll see it's come to what we would refer to in Vex as our golden ratio. So 61.8 is generally where people say to enter, but we always like to enter the 70.7, 78.6. So if this was a 1 of 3 and this is an ABC 2 of 3, then really the market now, would go up. If I want to be accurate and look for the best possible entry, with some observations, we have actually got cash. This is futures price. Okay, now that future price hasn't gone any lower. This is the previous cash low, and the cash so far hasn't gone lower. So you've actually got 27.1. Let's see exactly 193. That is the low, so that's what we're playing against. So price in theory can come all the way down to there and then still go up. So keep a lookout for that. I'm just going to start zooming out a little bit because I want to have a look at these areas. So this is key where this price came to. Now cash price when markets open never come here, so it would not surprise me if you look at these, the date of the 7th of August. You will see these levels here. Now I think there's a this little candle there, 27.348. If it happens, then we want to see how price reacts at that level. So 27.348, see what it does. Because if it starts bouncing, if we've got the price divergence, it might be an idea to go long at those levels, subject to your own risk and subject to your own due diligence. But that's one level I would be looking at. Again, if we break wave 4, then it's opened up for a new correction down, so it's a double correction, so it could have some lower levels. So that's where you're looking at, in my opinion. You want to be looking around this level. Keep an eye on wave 4. If it does break wave 4, then we look across and we look at our other targets or other areas. But see how this plays out. Hopefully you can manage your risk, make some money this week. There's definitely going to be some opportunities. Would not surprise me if we get a gap down and then rally. I'd like to look at the wicks. So you think if you start the week low, and if the market is going to go up now over the next couple of weeks, then they're going to want price low to start the week, so that if they drive price up, then by the end of the week you've got a nice wick below and a bullish hammer type candle. If obviously they want the market to go down, then the first half of the week they might drive price up, and then be conscious from Wednesday onwards that if price then starts falling, we might find that the weekly candle looks a little bit different. So again, just looking at S&P for now. If I go to the daily just to see how it's currently looking, again you can see some decent red candles there. Again on the weekly, we got a couple of nasty looking candles up here. We got the big wick there, followed by another red week. This second red week actually is clinging on to moving average 9 just about. It's got a wick below showing the buyers come in. So when the market truly closes tonight, we'll be aware. But again, this all helps with the Dow Jones, as obviously Nasdaq and S&P been sort of leading the market forward much more than Dow, which has been lagging. There are some big flashing warning signs. You want to have a look at that big divergence there. So RSI is lower, price gone higher. Obviously the Osman now is dropped below the line, so it has gone negative. So there's just a couple of things there, bearing in mind with those candles, that we just want to be nervous about. If you're looking to go longs at these levels, consider the time frame, because you don't want to be buying at the top and the market drops or retraces some of this big rally. You do want to be making sure that your risk management is on point. If you go long and then it drops, it could be very costly. Likewise, shorting, you need to look at these the smaller time frames, because there is still the potential for Dow to go up and make that new all-time high. So again, start shorting at these levels is also dangerous. The trend has definitely been up on the daily and weekly. Hourly 4 now, you can see prices below all the moving averages, so technically it is in a downtrend at the moment. So we need to be careful on both sides. We like to trade the extremes. There's no extremes currently showing in these markets, so there's probably likely to be better markets to trade unless you're sort of day trade scalping, and we will look for decent entry to swing trade this market depending on how these moves resolve themselves. Obviously that where I've got on the chart the blue waveform as a key number, that is, so keep that in your forefront of your mind and trade it as soon as, obviously for the group that we're in, as soon as we've got that divergence, we'll do it. We have got divergence and over the last couple of days, but really we want to see it for the big moves break there. I'll just highlight that so you can see this on the chart. So again, this final move on Friday, okay, that gave us that divergence. I'll just highlight it down here on both. So technically we've got that divergence, bearing in mind with the Fibonacci, which could be a wave 2 retrace we had last week. There's a very good chance that we do bounce from here. As I said, I've marked that chart. We want it to go up. We think it should go up, but we're very nervous if this wave 4 fails, because it opens a double correction. So hopefully you can share that. If you find this useful, obviously subscribe to our YouTube channel, like and share, and comment, and any other charts you'd like to see, let us know, and enjoy the rest of your weekend.